Hey guys, what's going on, and welcome back to another video. My name's Dion, and today I'm going to be breaking down yesterday's trade, which unfortunately was a 1% loss, but it was a very interesting trade, and that's why I want to go through it. So pretty much I'm going to give you the breakdown as to why I decided to take the trade. We had the daily open here over on the side. The red line, the red vertical line suggests or is the 12 a.m. open New York time. We had price trading at a heavy discount to start the day off, which is suggesting to me this is sort of the fake direction. This is not where we want to go, and we want to take the opposite side of this. Now, this is because of the power of three, a concept taught by ICT, which I've implemented into my trading plan, but I'm not here to teach you ICT. I'm here to talk to you about this trade. So after we've seen that downside move, price did come back up, formed the double top, which eventually became the London high. So this became an instant target for me, hence why you can see my profit loss chart thing having my target set to just above the London highs. So London lows were swept. That again further suggested to me that, okay, if broken to the downside, more than likely we are creating or engineering buy stops above the last above the last swing highs, which is above this area and especially above this last double top. Now, as the day progressed, we continued melting further and further into the discount market. And what I wanted to see was price to punch through that last low, which we created, which was the current daily's low. I wanted to see price punch that, then create my ICT model, my setup, and then I wanted to long from there, going into the London highs. Now, it started off alright, but this is actually how it ended. It did not end very well. This is a more in-depth look into my setup. So I saw price punch the lows, instant rejection, came back up, formed a higher low in the form of a swing low. We formed the highest swing low. Then we had a strong displacement to the upside, creating a fair value gap, shifting market structure because we had these swing highs broken. That suggested to me that I wanted to go long at the fair value gap within the order block, which is just here. So I took long. What you saw here was that profit was this area here, and then we came down and was tapped out. Now, how did price play out after I was stopped out? That's the interesting part. After I was stopped out, let me show you. Going to the hourly. See, so that was this the BTC. Yeah, so that was this section here. If I put that on replay, I mean, you already know what happened. You could see it in hindsight. So we had that punch, and then I was waiting for my setup to form. As you can see, this is the double top formation I was targeting. So there was where I was stopped out, and look, price instantly rallied. So good trade idea, wrong execution. But here's the interesting part. Was it a bad execution, or was price just being annoying that day? Because I look at the dollar index, the DXY, as a correlation to trade with BTC. Now, they're inversely correlated because this is the strength of the dollar and BTC is trading against the dollar. So in theory, when the dollar is rallying, BTC is melting, and when the dollar is melting, BTC is rallying. So with this logic, I applied that to the chart here on the dollar index, and it's the exact same setup, whatever. I took my shorts around here, 10-15, somewhere here, because I expected price to continue moving down on the dollar index, hence the green horizontal line here. This is my target. So since I was expecting price to continue its way down, I had that short-term idea of BTC going up, which matches my whole I went long around 10:15, 9:45, roughly there. So let's just say something like that. That's where I was stopped out, and my targets was above the London highs, which was, this is a very quick trade just up here. My long-term highs though were above these, somewhere about above here. But for yesterday's trade, for the sake of yesterday and the sake of day trading ICT, I do like to aim for the low-hanging fruit. So I would much have rather just aim for this 4% trade rather than trying to catch a massive 7% trade. I think it's a rough 7% or Okay, a bit more. I would have rather caught this. So as price melted on the dollar index, right, from, well, let's see when the move actually played out. So I was stopped out at 10.15. Wrong tab again. So 10.15, roughly here. This is where I was stopped out. So prior to being stopped out, all we had was downwards movement, which should have been upwards movement on here, but we didn't. From 10.15, as you can see, didn't really react very well. Price melted on the dollar index, but we just got these two pathetic bullish candles. Wouldn't even call them bullish. So I feel like the stop out was kind of rough just because all my confluences matched. I had the correlating pairs, like all of that matched well together as well, but we were still handed the L. And I think that's very important to consider because that just goes to show no matter how perfect you think you are, no matter how confident you are in your trade, even if you got two like correlating pairs, you're using on-chain analysis, you're using fundamentals, you're using technical, it can still go wrong. That's why we use risk management. I only lost 1% on this trade, regardless of like how wrong I could have been. I only lost 1%. So this was a very good trade because this has opened my eyes to something. This has shown me that even if my analysis is perfect, I mean, I think it was pretty good based on my trading plan. It worked very well, but I still took the L, and that's normal. It happens when you're a trader. So I just wanted to hop on board, hop on a video, explain this concept to you. And look, if you lose the trades over the next week, it's not your fault because it is a rough condition to trade against, you know. New York market has just gone through daylight savings, so time is a little bit off. Even ICT, the guy who I learned for, said that he's not going to be trading over this week. The fundamentals are too crazy. We got CPI data coming out on Thursday. We had some sort of data come out yesterday, which is Tuesday, which is I think why the dollar index reacted so strong and possibly why Bitcoin didn't react to it. But then it doesn't make sense to me. I don't know why, if they're correlated, they should move together. But maybe this is just the one time, because it's not 100% correlated. So maybe this is just the one time where we didn't see that correlation. And that was just the one time I happened to trade it. So we don't know. But look, it's a 1% L. I will be in the markets tonight, assuming there is a trade to take. That's it for this video. I hope you guys enjoyed it. I will catch you in the live stream tonight, 1 a.m. New York time. So if you're watching this video, I take these trades live every single day, 1 a.m. New York time. 1 a.m. Adelaide time, 9:30 a.m. New York time. So if you're interested, I'll see you guys there.